Uh, Global markets continue to navigate a complex environment shaped by artificial intelligence, shifting interest rate expectations, geopolitical developments, and changing consumer behavior. Investors remain optimistic about technological innovation, yet cautious about persistent inflation and slowing economic growth in several major economies. Let's begin with the United States. Wall Street closed mixed after another volatile trading session. Technology stocks once again led the market higher as investors continue pouring money into companies involved in artificial intelligence, infrastructure, semiconductor manufacturers, cloud computing providers, and data center operators remained among the strongest performers. Analysts say the AI investment cycle is still in its early stages. Large technology firms continue spending billions of dollars expanding computing capacity, pushing advanced graphic processors, and constructing new hyperscale data centers capable of supporting AI models. Corporate executives believe demand for AI services will continue growing over the next decades as business automate workflows, improve customer service, and increase productivity through machine applications. However, some market strategies are beginning to question current valuation. Many AI-related companies now trade at price-to-earnings multiples significantly above historical averages. While earnings growth has remained impressive, expectations have become extremely high. Even small disappointments during quarterly earnings reports could trigger sharp corrections. Several investment banks warn clients that although artificial intelligence represents transformational technology, periods of excessive optimism have historically been followed by increased market volatility. Meanwhile, the broader US economy continues growing mixed signals. Consumer spending has remained relatively resilient despite higher borrowing costs. Retail sales have stabilized as households continue spending on travel, entertainment, and digital services. However, housing activity remains under pressure. Mortgage rates could continue hovering near multi-year highs, reducing affordability for first-time homebuyers. Existing home sales remain subdued, while builders face elevated financing costs and persistent labor shortage. Real estate analysts believe the housing market may remain relatively stagnant until borrowing costs begin declining. Attention also remains focused on Federal Reserves. Investors continue analyzing every economic report for clues regarding future interest rate decisions. Recent inflation data suggests that price pressures have eased compared with previous year, but inflation remains above the central bank's long-term target. Federal Reserves officially have repeatedly emphasized that the future policy decision will depend on incoming economic data rather than a predetermined schedule. Financial markets currently expect gradual monetary easing over the coming year. Also, policy markets continue stressing that inflation risks have not disappeared entirely. Across the Atlantic, European markets experience moderate gains as investors evaluate improving manufacturing activity alongside persistent political uncertainty. Several European economies have shown signs of weak stabilization following a prolonged period of weak industrial production. Businesses confidence survey indicates that manufacturing orders have slowly recovered, particularly within the automotive, aerospace, and industrial equipment sectors. Nevertheless, energy prices remain an important concern. European government continues investing heavily in renewable energy infrastructure while simultaneously strengthening natural gas reserves ahead of future winter seasons. Energy diversification remains one of the highest strategic priorities after recent geopolitical disruption reshaped global energy markets. Meanwhile, the European Central Bank faces challenges similar to those confronting the Federal Reserve. Officials must balance slowing economic growth against inflation that remains higher than desired. Economists expect monetary policy to become gradually more accommodative if inflation continues declining over the coming quarters. Turning to Asia, economic developments remain mixed. China continues implementing measures designed to stimulate domestic consumption and support the prosperity sector. Authorities announced additional initiatives encouraging infrastructure investments while providing targeted financial assistance to selected industries. Despite these efforts, consumers' confidence remains relatively subdued. Many households continue increasing savings instead of discretionary spending, reflecting uncertainty regarding employment prospects and long-term economic growth. International investors continue closely monitoring China's manufacturing sector because of its importance within global supply chains. Recent factory surveys indicate modest improvements in export orders, although global demand remains uneven. Japan, meanwhile, continues attracting international investors' attention. Corporative governance reforms have encouraged companies to improve shareholder returns through dividend increase and share buyback programs. Japanese equities have benefited from stronger corporate profitability and renewable foreign investment. The Bank of Japan also remains closely watched as markets evaluate the future direction of its monetary policy after years of exponentially low interest rate. Now let's examine developments within the technology industry. Artificial intelligence continues dominating corporate investment strategies across nearly every major sector. Healthcare companies are expanding AI-assisted diagnosis. Financial institutions increasingly rely on machine learning for fraud detection, credit analysis, and portfolio management. Manufacturing businesses are deploying AI-powered quality control systems capable of identifying production defects in real time. Retail companies continue investing in recommendation algorithms, inventory forecasting, and personalized shopping experience. Cloud computing providers have reported exponentially strong demand for high-performance computing resources necessarily for AI model training. This surge has significantly increased electricity consumption among large data centers. Consequently, until companies have become unexpected beneficiaries of the artificial intelligence boom. Several power producers announced plans to expand generation capacity, including renewable energy projects, nuclear facilities, and natural gas infrastructure designed specifically to supply future data center demand. Energy analysts believe electricity availability may become one of the most important competitive advantages for regions hoping to attract AI investments. Cybersecurity also remains a rapidly growing industry as businesses adopt increasingly sophisticated digital technologies. Protecting sensitive information has become more critical than ever. Organizations continue increasing cybersecurity budgets amid rising concerns regarding ransomware attacks, data breaches, and state-sponsored cyber operations. Industry expects global cybersecurity spending to continue growing steadily through the next decade. Turning now to the energy market. Oil remained relatively stable despite ongoing geopolitical uncertainty. Traders continue balancing concerns about supply disruption against expectations for slower economic growth. major oil production continues have maintained production strategies intended for support prices while avoiding excessive market volatility. Natural gas experienced moderate fluctuations as well as weather forecasts influence short-term demand expectations. That concludes today's financial briefing. Thank you for reading and stay tuned for the next edition as continue following the latest development across global markets.